Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we're taking a look at D-Wave Quantum Incorporated, ticker QBTS. They had a massive move today. They were the top mover in the market, moving up about 26% off some earnings with 507% jump in revenues and the announcement of their next generation Advantage 2 quantum computer, which is significantly better than previous iteration. Analyst expectations look really good here. Might even be updated, but I want to take a look and see what is this thing. I've done a wheel on IonQ before. I am interested in the quantum computing space. I do have degrees in physics and computer science and studied quantum computing in college. That was my main area of interest. So I do think what they're doing here looks really awesome. But they're one of those pre-revenue research companies, essentially. Negative earnings yield, negative cash flows, debt's about twice what we'd like to see from them. Gross margins look super solid, 63%, but net margins are tanked. They are investing every single penny, issuing shares to stay afloat and invest even more. So if they can make it past this stage, they'd be a great growth stock. I mean, this is a really small cap stock right now. We're looking at last year's revenues of $8.8 million. And this year, $24 million. They were trading around $10 way back in 2022 and then cratered and traded for most of 2023 and 2024 around the $1 mark, which is actually what I'm coming up for the fair value for the stock. So those who got in 2023 through most of 2024 are in a very good spot, I think, just value-wise, and also you've 6x'd your investment so far. Would I sell out of it? Not necessarily. I mean, right now, the options premiums are massive because of the volume spike. So I sold a put today. I made like $40 selling a put, an 80% probability of profit, and we'll see how that turns out. Reading the technicals, I think there's a very good chance that it expires. So, but the fundamentals here are rough. I mean, they're improving. Are they improving? Cash flows improved a little bit. Margins definitely did not. All of those returns are bad. I mean, they are in an invest and grow stage, which is fine. That's what you look for a growth stock, but are we getting the growth out of it that we want? Analyst expectations, revenue growth of 176% in the next year, and it works out to a compound annual growth rate of almost 108% in the next 2 years. Is it fair to say that in the next 5 years, you would see 100% growth? Potentially. I'm sure it's going to slow down in those later years, but we'll see how things average out over time. In the short term, 100 is definitely a fair thesis. Share count, they're big on issuing shares. That's how they're staying afloat and paying for everything. So I wouldn't expect them to slow down too much. At a higher share price, they shouldn't have to issue quite as much. And that's what's going to hurt them in the long term too. More shares that they issue, the more it's going to dilute shareholders, and it's going to ruin the EPS in the future. And it's going to be rough if they're not able to get to a point where they can slow that down and potentially start buying back shares. Cash flows have not been the best. We see on average negative 609 in the last year, negative 509. I'd like to see that get towards positive, which honestly, I mean, that only takes somewhere between negative 25 and negative 30% growth because your base is negative, to bring them to negative 3.8% in the next 5 years. Assets, very consistent around 90 to 95%, and liabilities, 42, 35 in the last year, so we'll use 35 for this as well. No dividend margin, I'd like to see get much better. I mean, we'll see if they continue investing or if they decide that this next generation is where they're going to start to build and get a cash position where they can use their balance sheet in the future rather than operating at a loss and using their stock to back the company. So that negative 50% growth brings them to negative 50% margins in the next 5 years, which is significantly better than where they sit today. Still not good, but like that would be a reasonably bad margin, especially with a gross margin of 63%. So that would give you annual growth in the fair value of 52%. Starting with a base of $1, you'd be expecting 50 cents a year in growth. And in the next 3 years, you'd be looking at about $2 for the fair value. And then in the next 5 years, you'd be looking for 5.5. And I think that's getting significantly impacted by this share count. If they can slow this down like 20%, would make things a lot better. You see you get an extra 14% in growth. Now you're at 227 and 759. 10%? I know this isn't going to happen, but I just want to see how significantly this impacts. And that's why that's one of the first things I look at for a company. If I'm going to invest in it, they can't be issuing shares. They have to be buying them back. Yeah, cutting that down to 10 brought our returns up to 78%. Now we're looking at 11 in 5 years, 1%, 93% growth, 15.2% in 5 years. So still not even what you're getting from them today. So after today's rally, I don't know if that's feasible. It hit a high of 1760. It's coming back down a bit, down about $1 off of that. But within the last 52 weeks, you could have gotten in at 75 cents. And that would have been a very good spot to get into it. As you see, you'd be significantly outperforming the market in the 3-year and the 5-year, assuming that they're able to come in line with what analysts are expecting of them. I mean, we don't even really have to click through a lot of this stuff. The numbers tell the story already. Balance sheet is improving significantly, but the liabilities are a very similar shape. Free cash flow trending back towards the positive. And I don't think that there's too much more to say about this. I'd say the price got elevated off the hype. I'll wait for it to die back down a little bit. You can sell a put to at least make some sort of profit if it doesn't get down to your target price, and see how the company performs in the future. I mean, there's a lot baked into this thesis. I definitely think that it's feasible for such a small company, especially with such an incredible product, but we'll have to see how it plays out. I'll definitely keep an eye on this one. But I want to thank you guys for watching. Please like, enjoy the video, comment what other stocks we should take a look at, and subscribe so you can stay up to date with everything. And I'll catch you next time.